Imagine this. Trillions of dollars in real estate, stocks, gold, and even government bonds. All tokenized on the blockchain, trading instantly. 24/7, without middlemen or borders. That's not some distant future. It's happening right now in 2026. It's reshaping finance as we know it. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. Today, we're diving deep into tokenized assets and real-world assets, or RWAs, one of the hottest trends in cryptocurrency this year. If you're building generational wealth through crypto, understanding RWAs is crucial because they're bridging traditional finance with blockchain technology, unlocking efficiency, liquidity, and opportunities that were once reserved for institutions. Let's break it down step by step, starting with the basics. Real-world assets are tangible items from the traditional economy, like real estate, commodities, bonds, or even art, that get tokenized on the blockchain. Tokenization means representing these assets as digital tokens, making them easier to buy, sell, and fractionally own. For example, instead of buying a whole bar of gold, you can own a fraction through a token backed by the real thing in a vault. This isn't just theory, it's exploding in adoption. As of March 2026, the value of tokenized real-world assets, excluding stablecoins, has surged to more than $25 billion on-chain, nearly quadrupling from about $6.4 billion a year ago. That's massive growth, driven by institutional players who see blockchain as the future of finance. We're talking about 6 major asset classes now, exceeding $1 billion each: U.S. treasuries, commodities, private credit, institutional alternative funds, corporate bonds, and non-U.S. government debt. This isn't retail speculation. It's Wall Street putting real money on chain. Let's zoom in on tokenized U.S. treasuries, which form the largest category at around $9.6 billion. BlackRock's BUIDL fund alone accounts for about $1.7 billion in assets, offering short-term, low-risk returns from things like commercial paper and certificates of deposit. It's paid out over $62.5 million in dividends already, showing real yield for investors. Institutions like BlackRock and JPMorgan are leading the charge, experimenting with tokenized funds and securities to optimize collateral and reduce costs. Commodities are another powerhouse, with tokenized versions totaling roughly $7 billion, gold dominating about 70% of that. Take tokenized gold tokens like PAXG and XAUT. They're backed one-to-one by physical gold, providing a safe haven that's tradable anytime, even when traditional markets are closed. Right now, Pax Gold is trading around $5,100 per token, reflecting the spot price of gold with a slight premium for the convenience of blockchain. Tether Gold, or XAUT, is hovering near $5,093. During recent geopolitical tensions, like the Iran conflict in late February, these tokens saw combined daily trading volumes exceed $1 billion, as investors flocked to 24/7 safe haven assets. But watch out! Whales have been active. Over the past few days, large holders sold about $40 million worth of tokenized gold, including over 5,000 XAUT and 560 PAXG, netting millions in profits. On the blockchain side, Ethereum still leads with $15 to $17 billion in tokenized RWAs, holding about 60% of the market. But Solana is catching up fast, recently surpassing Ethereum in the number of unique wallets holding RWAs. Thanks to its low fees attracting retail traders for fractional shares of tech companies, this highlights how RWAs are democratizing access. Anyone can invest in fractions of high-value assets without massive capital. Institutions are fueling this boom. Barclays, Coinbase, and Meta were early pushers. But now we're seeing broader adoption from firms like Mastercard and Robinhood, focusing on tokenized money market funds and stablecoin integrations. The UK FCA's sandbox for stablecoins and Iran's $7.78 billion crypto shadow economy show global integration. Projections are bullish. The RWA market could hit $100 billion or more by the end of 2026, with tokenized equities, ETFs, and fixed income leading the way. Top RWA tokens to watch include Chainlink, for its oracle role in verifying real-world data. ONDO Finance for tokenized stocks and ETFs, Pendle for yield trading, and Quant for interoperability. These are flashing bullish signals after recent corrections. With on-chain data showing reduced exchange inflows and potential rebounds, projects like Stellar are seeing 25% jumps in RWA value, even as their native tokens dip. But remember, while RWAs offer stability and yield, they're not without risks. Much of this capital stays outside DeFi due to compliance issues. And the sector's still early. Only 12% of RWA-backed stablecoin supply has entered DeFi protocols. Geopolitical events can spike volatility, and regulatory changes could impact growth. The tokenization of real-world assets is inevitable. All necessary assets will run on the blockchain, creating a sustainable, decentralized financial system. Platforms like Eldora are emerging as gateways, offering one dashboard for tokenization, investment, and management. Partnerships like Hyperion DeFi's private lending pools with attractive rates are making RWAs more accessible to institutions and retail alike. In summary, tokenized assets and RWAs are signaling a massive shift to on-chain finance in 2026. With institutions like BlackRock and Coinbase pushing stablecoins, tokenized stocks, and gold. With gold tokens like PAXG and XAUT exceeding $5,000, this is your chance to get in on the ground floor of the next evolution in crypto. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.